Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the Forex market. Currently, the situation is changing very rapidly, and it's actually a lot of consequences might happen in the nearest couple of weeks that we actually can't imagine even. So on the surface, it seems everything, well, actually simple things. Treasuries placing bonds, Security and Exchange Commission regulating the crypto market, and so on. But currently, the more and more information appears that it might be the well managed and actually linked together processes that's actually spinning up some crisis in the United States and in general in the dollar system. And potentially it might be the preparing for introducing of the CBDC cryptocurrency, government cryptocurrency in the United States, because Fed now will be launched in actually next month. So second important moment is that it seems that our suggestion was correct, that Fed intends to unwind a bit the reverse repurchase agreement to get the liquidity. So currently cash starts moving to the big banks, and the value of the reverse repurchase agreements with the Fed is decreasing. So because Fed is providing, the Treasury is providing some premium to new bond issues, and well, that makes the reversing the, if you call it reverse repurchase agreements. So it means that actually banks return back the bonds and getting back the liquidity, getting money. But the amount of the placement is really huge, just because in one single session yesterday was placed approximately 365 billion. And if you will see some surprising and actually just crazy action on the Forex market, on intraday charts especially, don't be surprised with that. So because really big process stands behind this. So there's even some really conspiracy theory ideas exist that we discussed in the weekly report, but in fact I do not see anything impossible with them currently. So it might happen. I still think that in the current situation, it's more reasons to suggest further drop of the euro and more demand for the United States dollar, just on the background of the processes that we see currently. And overall performance here on the euro currency, take a look what we have. Potentially, it still could happen with double repo buy or something of that sort. But take a look at the market currently, it's actually starts forming kind of taking the shape of the pennant. We do know that here we do not have any support areas. And this is not typical for the double repo. When you see some kind of the pennant shape and lack of some pressure to the downside, just mostly looks like some minor pullback without any pressure of the burst to the downside and its failure, this is usually leads to downside continuation. If even we get the close above the 3x3, this will not become the double repo, because we do not see the capitulation of the bears. We see the minor pullback, retracement, but we do not see that bears were trying to push it through the lows and failed. This is just sideways consolidation, which means that chance of downward continuation seems a bit better. Besides, if we'll take a look at some other, using the cross-market analysis, you will see that's, well, some confirmation of this. For example, Great British Pound, possible hand and shoulders. If we take a look at the Great British Japanese Yen cross market, recall our long-term target that we have discussed, well, half a year ago, and we said that will be the potential destination point. Now Japanese yen is falling. Great British pound mostly stands flat. Once the XOP will be touched here, Great British pound could start dropping, and here's might be starting with a downward action. But it's not only on the Forex market. We'll take a look, for example, on United States Treasuries. You could see the yield is rising here. So once the yield is rising, this is in favor of United States dollar, and that will trigger the additional demand, actually what the Fed would like to get. So recall what we have shown you in our weekly report. This target, this chart is concerning 10-year bonds. This really could show the upward breakouts, definitely bullish consolidation here. So all this stuff indirectly suggests strength in the United States dollar. That's why I'm really not too fascinated with the idea that euro could just break this tendency and show significant rally, long-term rally. Yes, it might be some splashy spikes here. We do not know, but globally and fundamentally, reasons for sharp reversal, well, I do not see. So on the follow time frame chart, as we said, is starting taking clearly the shape of the triangle. Our butterfly pattern is still valid. It suggests a drop somewhere to the 105.50 array initially. So it might be some problems and difficulties with a particular point for position taking, especially on the hourly chart, because here you can see the total mess. So the kind of the very choppy and sloppy consolidation. So yesterday we were considering this pennant, wage pattern, and said that maybe it makes sense to wait for some pullback inside of this consolidation just to get the better entry price. As you can see, in fact, market has shown just some action out of this. If you remember, yesterday we talked about this. Just to remind you what we discussed. If you remember this one, wedge pattern. So you can see it was out of that and just dropped back to the 618 level. But all the stuff, guys, is happening inside of the major swing here, and makes no impact on the major direction. So because recall what we said on the weekly chart, this in the indecision week. So the direction will be set only when the market will go out of this range of the previous week. I suggest that it's more probable this will be to the downside. But currently, with this performance, you can't say definitely what will happen. That's why if you would like to take the position here, just to not be occasionally swept off of the market with this some chaotic swings, try to take the position as closer to the ultimate point, depending on what direction you're trading. If you'd like to short, well, try to use some deeper retracements and taking the position closer to this area, placing stop somewhere above this level. Maybe trying to catch some kind of the ABCDs or something of that sort. If you'd like to buy, in this case, wait for some deeper action. Of course, we should avoid this type of action against us. So if we'll see really sharp upward action, it's better to not take the short position. This is similar to the downside. That's what we have currently. This market is forming, well, I wouldn't call this as a diamond, but definitely this was some widening triangle. Now it's turning to the narrowing triangle. So, and the only clear pattern that potentially might be formed here, you could get either on the 4-time frame chart with this butterfly, but in the same manner you could easily suggest upside butterfly, right, with this shape. So that should point you where to place the possible stop orders, trying to take it as close to invalidation point as possible. But as I said, I'm more gravitating to the view that's, well, to the bearish context. It seems that it's my personal opinion, maybe I'm wrong, but somehow for me it seems that the downward action it's more probable.